This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 152. US v China. How will it end?
Welcome to the Debunking Economics Podcast with Professor Steve Keen. I'm Phil Dobbie. Today, the US and China are at war. Well, not literally, not yet anyway, but a trade war is bad enough, and it seems to be hitting many economies around the world. So where will it end? Will China be forced to give in? Will the US decide it's not worth the hurt? Or will it just carry on for the rest of our lives? In any case, who is the winner and who is the loser? I've heard lots of people say nobody wins when there's a trade war on, but is that really the case? That's today on the Debunking Economics Podcast. So there is this ongoing trade spat between China and the United States. The US has 25% tariffs on $250 billion worth of Chinese imports. China has responded with tariffs on $60 billion of American goods. Donald Trump may well step it up with more tariffs on the rest of China's exports to the United States. The US, of course, is banning Huawei. China may well ban FedEx. Nobody's talking. They're just sharing insults. China is saying if the US wants a fight, we will fight to the end. So, Steve Keen, I mean, you are a protectionist at heart, so you must think Donald Trump is doing the right thing here. It's going to create new jobs for US workers.
Well, there's something. I mean, I've always argued that the focus that economists have on efficiency and allocation of existing resources is just the wrong angle to attack capitalism from completely. And what really matters is investment and development of new resources. And when you look at the history of America itself, my good friend Michael Hudson has an excellent book called America's Protectionist Takeoff, pointing out that like many other countries, including, of course, China and Korea and Japan, and in its own way, Germany, countries industrialized first with either explicit or implicit trade barriers that meant that what would otherwise have to be imported from overseas, like, for example, America importing English steel, was no longer possible. So you had to build your own steel factories. And then with the economies of scale, as the American economy expanded as well, plus the pressure to be able to become competitive and, export the steel in the opposite direction at some stage, they all work. So
does that work just in industrial era, though, as you're industrializing? I mean, we're in a post-industrial era now. If you look at what Donald Trump's doing, I mean, he's imposing these tariffs. He's giving money to farmers to compensate farmers for the business that they're not getting. That's not exactly investing for the future, is it? That's just propping up the mistakes.
What's actually happening, and it's what's happening back in boardrooms that I'm interested in. And what you've had, I mean, you look at the way in which China developed, and this is why I look back at it, there's very, very fortunate sort of incidentals, not accidents, but happenstances in my life that decades ago I was involved in overseas aid. I was working as education officer for the Australian Freedom from Hunger campaign. And as part of that, my objective was to change Australia's mind about overseas aid. Well, thank you very much for my budget. I think I got $40,000 a year to spend, including my salary. But what we did at one stage, we called Media Watch, which was looking at the coverage of the third world issues in the Australian media. Then we followed up with a broadcasting tribunal hearing, which is worth talking about in itself, my one exposure to Rupert Murdoch. But finally, I suggested the idea of running seminars between journalists from different countries, where we covered not just the daily news, which, of course, as you know, subbies and editors sit down and grab the rival newspapers. What did they get that we missed? That's the sort of event focus. And I said we need issues-oriented journalism. Gave a talk about it at a conference in Brisbane, which a woman in the audience walked up to me afterwards and said, "I'm Jocelyn Shea. I'm the head of the Australia-China Council. I really like your ideas. We'd like you to do that for China." I said, "Yeah, sure," and then started flirting with somebody in the audience, another story, and ignoring it until I got a letter from Jocelyn Shea saying she was going to finance me taking a group of Australian journalists to China. So I put together a year's coverage of Australia in the Chinese press, and they did the same. China in the Australian press, and they did the same in the reverse. We then sat down for 6 days, I think it was 4 or 6 days in Beijing during the trial of the Gang of Four, and discussed each other's comparative coverage, and then hopped in a kind of set of Toyota Hilux buses and the old Soviet clone of the DC-3, flying around the country. And we went eventually to the then free trade zone as the concrete was being laid by CSR Australian company, had an Aussie barbecue in the bottom of China at the time. And we then had the plans of the Shenzhen Free Trade Zone explained to us by probably the most intelligent people I met when I was in China. And their idea was there was this loophole in the American tariff laws that let American companies export components to a third world country, have them assembled or whatever else processed and sent back, and not pay tariff on the change in value in the meantime as a sort of subsidy to developing countries. And that's exactly what the Shenzhen Free Trade Zone was set up to exploit. And so far, it was nothing different to what I'd learned from other countries. Indonesia was running free trade zones. Malaysia was running free trade zones. They all had them. And they'd all fail ultimately because as the wages rose, as they would do ultimately with the extra pressure coming in from, employing all those workers in process jobs rather than working in agriculture, but China said as well, and every company has to have a Chinese partner when it starts, and no requirements.
And we sort of know all of that, and that has mushroomed.
No, you don't know part of it, mate. Unless I've told you already. That is, within 5 years, the Chinese partner had to own half the business.
Yeah. So, I mean, it did move quickly. But how is that China's fault? So it's got to the
not China's fault at all. It's been incredibly successful.
Yeah. And they've now got $400 billion trade surplus against the United States.
Yeah.
More fool America, I guess, for letting it happen.
Absolutely. Again, this is the typical story. American capitalists couldn't give a shit about the workers. So they got this offer of the only reason you'd accept giving half your business away is you've got to make an incredibly profit on the other half. So to actually say, we'll start a business in the Shenzhen Free Trade Zone. We'll shut down what we're doing in Midwest America. We'll transfer it to Shenzhen. We'll pay the workers. You must be paying a pittance. And of course they were. Back in those days, so I'm talking 1981, 82, the monthly wage of a Chinese worker, a process worker, was probably equivalent to the daily wage of an American. So they could afford to sacrifice half the profits because they were making such a killing on the wage costs, and that's exactly what the Rust Belt was. All these Americans being shut down, production moved offshore. That's what China took advantage of, and at the same time, they wanted to improve their engineering. So because the Chinese Communist Party is dominated by engineers, that was a major thing. We want this technology as rapidly as possible, and that was highly successful. So China's successfully industrialized, and now, of course, Trump is
drove the horses bolted.
The anger about it in America. Yeah.
And look, and if China did get more expensive, then there's always India, Pakistan, the Philippines, all those other places that the.
But the reason it's going to happen more slowly than it would from if they hadn't had half of the business becomes Chinese, then when it moved, it would have been foreign companies based in China moving to become foreign companies based in Vietnam. Now it's going to be Chinese companies setting off bases in Vietnam. And Chinese companies establishing work.
It's cheaper for them.
It's cheaper for them, but the profit goes back to China now rather than going to America.
So hasn't the horse bolted? Trump's not going to win on this, is he? Because is the US really going to set up its manufacturing industry again? Is it going to really redeploy people back in America? Or it seems like it's too late for that?
I think it's too late for population redeployment. It's not too late for machinery redeployment. Because again, think about what if you go to 30 years ago, you just outsourced a bit of your work to China, and the long-term objective was to shift as much as possible there to minimize your wage costs. But what has happened over time is this incredibly intricate supply chain starting in China. Often, in terms of computers, for example, the CPUs are still made in America because China hasn't yet mastered micron level technology. So they can make some chips, but they certainly can't make CPUs.
Right. But even before that, it actually starts in China because a lot of those rare earth materials that are needed, actually, China's got a stranglehold on those. It
doesn't have a stranglehold. This is again a lot of what I say is coming from actually feedback from some of the patrons. I have to acknowledge here, but I'll get sent links to see just how serious. It looks like the reason that the rare earths are being done in China is not because of availability of the mineral deposit, because basically there's no such thing as a mineral deposit of rare earths, because they're very, if you can find a copper deposit, you can find an iron ore deposit, you can find an alumina deposit. You cannot find a rare earth deposit because they just bond with anything. So it's the refining. You'll find rare earths in copper deposits. You'll find rare earths in a whole range of other minerals.
Yeah.
You get them as a side effect. And then to actually, because there's such trace out levels, the processing is extremely, it's polluting and costly. So therefore, that's why China scored because
they're happy to pollute and they've got a lower cost of labor.
Yeah, basically. But now, because it's if you're willing to put up with the less pollution, because you'll have a higher technology base in the West and higher wages, you can still produce the rare earth. So it's a nuisance rather than a stranglehold.
But if America was to take that and do it themselves, that would push up prices. If America was not outsourcing its labor to China or to any other country, that would push up prices. So US consumers, at the moment, it seems US consumers are happy to pay for things as they are, perhaps not so happy to pay more if these jobs were brought back. But also, hey, what's the problem? Because if you look at unemployment in the US, we're told by Donald Trump it's at an all-time low.
Yeah, I'm much more a fan of the population to employment to population ratio, but even that is now getting back into close to what it was before the 2007 crisis. So the QE, as clumsy a way of stimulating the economy as it is, has had an impact over time. Deficits have also helped, and tax cuts in a very trivial way. It'd be much better giving tax breaks to the poor or subsidies to the poor than tax breaks to the rich.
But all of that could be done. Yeah. I mean, you could say, well, okay, if we need QE, let's continue. If we need tax breaks, yes, let's make sure we're dealing with inequality in the economy at the same time. But surely better to say
making it worse. Yeah,
we're rather than making it worse. But surely better to say, well, okay, all the jobs that we don't want to do, let's get them done overseas cheaper if we've got full employment in our own country, or let's create jobs. What's wrong with that? Well,
this is the thing. It's at the moment, the American economy is doing fine. It's post crisis. I see it as a post-credit crisis, not having got over the problem at all, but supplementing the shortage of credit with the government deficit and the trade and the tariff thing as well. And the impact in terms of consumers is less than is normally estimated by economists, because they assume a pretty much 100% pass-through of the increase in tariff. And then they say, the question is then, does it fall on the producer or does it fall on the consumer, the incident calculations they make? In fact, they're effectively presuming that the firms are pricing themselves at marginal cost. Marginal cost rises, therefore price rises by the increase in marginal cost. And does that fall upon the consumer or upon the producer, depending upon elasticities of demand and supply? Yeah. Those are the calculations you get from most economists. Right. When you look at the data, you find it's all flat costs. It's falling costs. The higher the volume, the lower the cost of production, and you have a markup, therefore, on your cost of production, which is your profit markup. And then if you face a tariff increase, you don't want to lose market share to the local producers. So rather than passing on 100% of the cost, you absorb 80% of it yourself and pass on 20%, and you reduce your margin. And so the price increase that consumers finally see is 1/5 as high as it would be if there's 100% pass on and it all fell on the consumer.
Well, that says introducing tariffs then as a form of protectionism just don't work.
Well, they don't work in terms of making it more expensive and for consumers locally, and giving 100% of that advantage then to local producers.
Well, that's the only reason you do it, isn't it? The only reason you do it, unless you're saying, well, no, which Donald Trump said a few times, no, we want the money. We'll take the money from the tariffs because we'll use that to subsidize our farms.
That is a form of tax increase.
Yeah.
So in that sense, it's covering part of the deficit he's running elsewhere. Not that you need to, but that's what's actually happening, just changing the tax base. And it may be, in some ways more just as effective as income tax. So it's not the drastic change that people are worried about at that level. The drastic change is you're disrupting supply chains. Yeah. And people are looking at this and their internal calculations are going haywire because suddenly they've got to boost the price by 25%. If they're going to be trying to find internal ways of shipping it so they don't actually treat it as an import. All sorts of tricks are going to be tried. But fundamentally, people working in the managing directors of American companies are going to be saying, we just can do without this disruption. And what are the cost advantages of China these days versus bringing it back onshore? And what are the management advantages of not having to worry about a long supply chain anymore? And what does technology enable us to do that wasn't possible 20 years ago?
Yeah.
And on all those fronts,
makes sense to bring it back home. Yeah,
it makes some sense. I mean, there's certainly the cost advantage. What's happened with technology over time is we've increased the amount of machinery used to exploit energy and turn it into work, and reduced the amount of labour done the same way. That's what we call increasing labour productivity is actually increasing machinery productivity, meaning you need less workers per machine.
But it looks like Donald Trump could take this one stage further, though, doesn't it? So rather than just tariffs, I mean, he's looking at, a ban on Huawei, perhaps other companies as well. China's looking at perhaps doing the same thing as well. That's a different thing. When you just say, no, you just can't sell here. We're going to protect our own industry. I'll blame it on security concerns because I can make a unilateral decision on that basis, and away you go. So all of a sudden, that gap in the market has to be filled by American companies.
Yeah, but at the same time, a question of how much of the gap can they fill? I mean, how much of the production is actually seriously based overseas in the sense that there's no local alternative? In some areas, some types of steel, for example, like in certainly the UK, when the UK looks like it's going to lose the Sculthorpe iron and steel facility, it makes some of the steel for not that I'm particularly a fan of the Trident missile, but it makes some of the metal for the Trident missile that isn't made anywhere else in the UK. So you'd suddenly, an essential part of the UK's defence would depend upon imported products, which is not a healthy situation to be in. So there were some products which have been outsourced from America to somewhere else that America doesn't currently produce. And Tim Cook's comment at one stage that if he wanted to hold a meeting of all the machine tools workers in America, he could hold it in his boardroom. If you want to hold the meeting of all the machine tool workers in China, you'd need a football stadium. That is partly the problem as well. You still need the skilled labour, and America doesn't have that to the same degree it had 30 years ago because of the outsourcing movement. So it is difficult to do some of this, but at the same time, the directions of technology, I know one of my patrons said, look, I'm talking pie in the sky when I talk about additive manufacturing rather than what we call classical manufacturing, cutting pieces of metal. Additive's got a hell of a long way to go, but the direction it's moving in is that you don't need the machine itself has to be able to do all of that. You need an operator for the machine. You don't need people cutting some pieces of metal. You can use far less moving parts, far less pieces of metal. Far less assembly is necessary. So if the production does come back onshore, it'll be much, much lower labour, much, much higher machinery content, but it will take years to do it. But what it will mean at the same time is that if it's going to happen, American companies have to be investing. So if they're investing, you get a growth spurt.
And there's more reason perhaps to invest in the United States, because if there's a trade war on, it looks like the safe place to be, because it looks like all this uncertainty is hitting the rest of the world, the US less so. I mean, you hear that phrase, nobody wins in a trade war, but maybe everyone loses, but maybe the US is losing less than everybody else. So, if the US economy was to slow, they've got more room to maneuver, because if we believe rate cuts make a difference, and that's a topic for another day, but if we believe that's the case, the Fed's got more room to move than most, because the interest rates are reasonably high. In lots of places like Europe, they're zero or below zero. So the US has the ability to throw around its economic might, doesn't it, at the expense of everyone else, and there's a lot of that going on, I think.
Yeah, and I think if you actually if you cause corporate investment to rise, and I think that would be happening in reaction to the disruption of the supply chain, then the American economy doesn't come out too badly out of the whole thing. But American workers don't do so crash hot. But again, Trump doesn't really care about them. If he can advertise the increase in profits and the investment that's going on and so on, and that the investment itself has spillover effects. So, when you're going to be constructing a new plant, you have to have construction workers, you have to have the food supplies, what friends of mine call the sushi effect. You increase the sales of sushi because you're building an auto works. All this sort of stuff is going to happen. So America can get through this trade war fairly comfortably. It's the rest of the world that might get stuffed up. And of course, at the same time, China is going to be saying, let's get the hell out of our relationship with the States, which has been diminishing anyway. Let's build it up with more sensible places like Europe and Russia.
Yeah, although they still, of course, hold an awful lot of US debt. I mean, they're probably going to hang on to that in the form of treasuries for a long time. But if in this environment, if you're going to buy one currency, what currency are you going to buy? You're going to buy the US dollar because that seems to be the hedging your bets on who's going to win all of this. But China's currency, of course, I mean, that's part of it as well. China's currency is partially fixed to the dollar. So, I mean, that presumably keeps prices lower. So that is also to China's advantage. If it was a free moving market, if China became so cheap to produce with such high volumes, then that would have pushed the value of the yuan up, wouldn't it? And the price disadvantage would have fallen away. But because it's pegged, that's not happening.
And that's one reason they buy the treasuries as well,
yeah.
because they quarantine the impact falling to their own currency. So all this stuff is done to mean they can continue their trade-oriented programs and run the export surplus they've got. So they're not about. They might well do something about the Chinese treasuries. It won't work because, of course, America's got a limitless capacity to buy things denominated in its own currency, and the rest of the world's for that matter, because it's the reserve currency of the planet. So that's not an effective weapon.
And how'd you buy them anyway? I mean, the moment you started, how'd you sell them? Because the moment you started to sell them, everyone would get wind of what you're doing. They'd all go down in value. So you'd stop selling them. So you can only sell so many when you hold such a large proportion of the total stock.
No, in fact, because every issue of American treasuries has been oversubscribed in history. And the same thing would happen here. If the treasury is for sale, there'd be buyers. And if there weren't buyers, the Federal Reserve's the underwriter.
Yeah.
So it'd be a damn squib. It's not going to work.
And I guess in times of uncertainty, everyone wants treasuries.
Yeah, in the same situation, you know, America wins both ways. What I think is more likely happening, I hope it's happening, is that I hope the Chinese are doing what they've been speaking about for some time, and that's trying to design a basket of currencies to create a sort of a virtual currency that can be used for international trade that doesn't involve the American dollar.
Yeah.
Now because the real problem with the Americans' objective of getting trade balance with China is they can't get trade balance with anybody because they've got an overvalued currency.
So that brings me to my next point, because if you look at the growing economies, obviously the developing economies, China, India, Vietnam, the Philippines, Cambodia, massive populations. These are countries that don't necessarily crave American cars or American farm produce. So isn't there a danger that trading relationships, if America carried on this way, trading relationships are just going to develop that simply exclude the United States? But perhaps they're seen as being too much of a sovereign risk, a country that you don't want to deal with because they break trade conventions. And and I
think that's the case. And they are doing it. I mean, they broke trade conventions with forming the Bretton Woods Agreement in the first bloody place, because they keep on emphasising Keynes wanted a non-national currency for international trade, the Bancor. And Harry Dexter White insisted it had to be the American dollar. And as the boss of the American delegation, most powerful group at Bretton Woods, he won the day. So right from the very outset, they've corrupted the system. We're now just 70 years down the track or thereabouts, so it's coming up to 75 years actually. We're just wearing the consequences of that.
So that makes America isolated, isn't it? I mean, that's the danger, isn't it? That this could happen.
Yeah, and I'm hoping it does happen, because America's never going to voluntarily give up having the reserve currency of the planet. It'll have to be done despite them. The only country in that sense that has the capacity to do that is China, because if Europe is not about to disobey America, they're certainly going to snigger about Trump, mainly behind his back, sometimes in front. They're certainly going to complain in closed doors with the other bureaucrats about what's happening courtesy of America's policies, but they're not about to go explicitly taking on something as a deliberate rival to the American dollar. The Chinese, particularly with the trade war being pushed in, I think are going to do it.
Will they? Or are they going to suffer? Because they already are, aren't they? And that they haven't got the domestic growth that they were hoping for. I mean, that was always the answer, wasn't it? Look, if they lose the export markets, they've got a massive domestic market. They just need to grow there. But that's not giving the growth that they would like. If they're going to develop new trade relationships, that's going to take time to develop. I mean, could the US actually say no? And it's been said, in fact, quoted in the Chinese press, that this isn't a trade war. This is the United States trying to basically ruin China. If you look at what's happened with the Chinese stock market, for example, massive falls there, all down to Donald Trump.
Yeah, I mean, it certainly is. This is international finance is the conduct of war by other means. So yeah, they are trying to destroy it, and there's certainly enough American elements to the American administration that see this as a war, as a fight between two cultures they intend winning. So it is in that sense, it's a great power conflict. It's something which we haven't seen in that sense since the in some ways even the First World War rather than the Second.
Yeah.
That was the last real great powers conflict. So that's what's happening at the moment. Now, it can't go the same direction as those conflicts did because we have nuclear weapons these days.
Yeah,
It's
almost like we've moved. We had wars fought with weapons, then we had a Cold War, which was really fought with politics, and now we've got a war which is fought on the financial markets. It's so 21st century, isn't it?
And I think. I'm certainly not going to try to pick a winner out of all this. I think
I was hoping you were. That's what I've been edging to. On the one side, we're saying the United States has got the ability, perhaps, to destroy China, but on the other side, China's got the rest of the world and has, perhaps got the ability to isolate.
I would
the United
come down
States.
on the China side in the long term, America in the short. So I think in the short term, America's first of all is getting an investment boost out of this.
Yeah.
It's also got people buying its currency, which is partly the problem, still overvalued. They'll hang on to being the reserve currency of the planet. But at the same time, China has already started the Silk Road project. It's almost finished the Silk Road project. Yeah. They've got strong links in Africa as well. So you're getting like a continental block. If you think about Europe, Eurasia, Africa as one continental block, and the United States and Canada and partly parts of South America the other, then you're getting a breakdown across those levels. And that may well end up being enforced further by climate change, because at some stage the ships that cross those oceans and the planes that cross those oceans are going to be told you can't do that anymore.
Yeah.
So there's a contentification coming on, and China with Europe and the Middle East and Africa on its side has got the biggest continent.
Yeah.
So I would say in the long term, I'd see China being the winner out of this.
Yeah, I mean, that proximity argument's an important one, isn't it? But I mean, also China's pretty close to all of China. Like there's 1.4 billion people in China, so the domestic market's pretty good, and India isn't far behind. And so, of course, the influence of the US economy is going to slide. I mean, that's just inevitable just by the sheer weight of numbers before we even look at the proximity of all of these areas and how America's a bit further away from it all.
Yeah.
So what about debt though in China in the short term? Is there a way that Donald Trump, because could he make the debt in China reach a tipping point where things start to escalate badly for the Chinese?
Well, I mean, that's what you're talking private or government debt here, mate.
Well, bit of both. But I mean, you and I both know the real issue is going to be private debt, isn't it?
Yeah. The Chinese private debt is huge. It's about 2.2 times GDP if you look at the debt of the non-financial sector to the financial sector. And we saw the stock market crash, so investors will be feeling a little bit weary at the moment. Yeah, but I think the debt's owed by private people, but who are the banks themselves? And it turns out that, particularly in China, to a large extent, a lot of those banks are state-owned. So in some sense, what is seen as a private system, and the debt itself is held by individuals in a private capacity, but the banks themselves are partly backstopped by China and by the Chinese government. And if they want to write debt off, they can write debt off in the same way that a central bank can, because a central bank doesn't have to have positive equity. Now, if a state-owned Chinese so-called private bank gets to be wiped out by equity, it can be instantly restocked by the Chinese government. So I can expect if there's a financial crisis in China, it'll be two-sided. The debtors will be in trouble, and particularly if the debt's unsold and you get debt collectors going after it, that's never a pleasant experience. But the banks themselves will continue. Whereas in America, of course, when you're looking at the 2008 Armageddon that Paulson was talking about when he was asked about, what happens if we don't give you the $700 billion you want for the TAR project? His answer was, may God have mercy on our souls, because literally all but one American bank would have collapsed. 6 of the 7 major shadow banks and almost all the major banks would have collapsed at that stage, and American capitalism would have come to a grinding financial halt. That won't happen in China. So I see China as having a private debt crisis. But it'll be more one on the debtor side, and then it's a question of what does China do about the debtors. And even China doesn't have democracy, which is one of the best things in its favor, because people go along and protest outside the party offices. They burn down things. They kill a few officials, and the party tends to react better to that than they do to getting a bad vote once every 4 years in elections.
Well, it saves a lot of effort, doesn't it? With people going around to polling booths, you just let a few people cause a bit of disruption, and then you get change that way. Outcomes not totally against that, but it's possibly not good to advocate killing people. But was Donald Trump right then to take this war on? I mean, did he have any choice? Is he actually achieving anything, or is he just making things worse?
I think he's actually achieving something. This is the weird thing. Sometimes you need a bull in the china shop, pardon the pun, to make things change. And I think he's been that bull. So what you've got is a shift of American corporations are going to be deciding to get out of the supply chain business because it's difficult managing a long supply chain. Outsourcing and all this sort of stuff was sold as a miracle solution. It's been more of a pain in the ass than a miracle solution. So that is one of the issues. And that would be fine, wouldn't it? If China's answer to all of that was to say, well, okay, we're not the sweatshop anymore. We need to innovate ourselves. And we're starting to see some of that. There are some great innovations coming out of China now, which totally originate in China. And if it went down that road, that's great. Unless America says, oh no, that's a Chinese innovation, we're going to block that company. And then that's not fair. Yeah, and at the same time, they should block it for America, but you can't block it for the rest of the world.
Yeah.
Americans will try. I mean, this is the crazy thing. But how do you pronounce Huawei? I can get the name wrong.
Huawei. Well, I would say
Huawei. Okay. Well, they're putting the Huawei founder's daughter in prison in Canada for breaking an American rule about trading with Iran. I mean, God Almighty, talk about imperial overreach.
Yeah,
that is just crazy that you can arrest somebody in a different country for breaking the laws of your country. Insane, but that's America.
More to the point, particularly when actually they weren't breaking any everyone had signed the Iran agreement, and he decided to overrule it. So unilaterally, he was breaking the law, actually.
Yeah. So it's awful stuff. That's why I say it's great power conflict things. You come down to what Tsar Nicholas does rather than geopolitics. And we've got a pretty weird Tsar Nicholas in America.
Yeah, Tsar Donald.
In that sense, he is having, in this particular case, he's spurting investment, which so long as Americans could outsource everything and make a cost advantage out of it, even if it was a pain in the ass to administer and so on, they'd keep on doing it. Because Trump has done this huge disruption, then American corporations are investing domestically. They will tend to do that. And when they do it, it'll be the latest technology with a lower need for labor and so on, and a local supply chain will start to develop. So, and then at the same time, we need to get away from the American dollar. Well, he doesn't want to do that, but that's an unintended side effect. The Chinese will be doing their best to design an alternative trading system for the planet,
which is a good outcome as well.
Yeah, and then at the same time, we need to stop all those ships crossing the oceans. Well, one-ways, if they've got no cargo, they don't cross. So, it's the unintended consequence, the unentitledly good side of the orange monkey.
Right, a little bit of localization is not necessarily a bad thing. All right, we'll leave it there. Catch you again very soon. Thanks, Steve.
Hey, mate. Bye.
And that is the Debunking Economics podcast for today. Next time, or it might be the one after, we're going to look at the EU. Is the EU anti-growth with all this Brexit talk? A very topical discussion. Join us for that one. I'm Phil Dobbie. He's Steve Keen. We'll see you next time. If you've enjoyed this podcast, then please share it with your friends, like it on YouTube, and subscribe to this channel.